Well, it's the year of the restaurant. So with that being said, where we are in each cycle helps us determine how we make recommendations. So at this point, looking from contraction into expansion phase, we're going to stick with the momentum plays and the winners like a Shake Shack, a Darden, and a McDonald's and a QSR. But we also love recovery stories. So that would be Chipotle and Potbelly. And then we'd make reference today that we upgraded BJ's. And in terms of casual dining, that whole segment is doing better.
Nicole, one of the stocks that you mentioned, of the idea that restaurants could be good is a mid-scale play. This is Darden Restaurants. That was up on your list as well. Darden Restaurants has hit a 52-week or better high, multi-year high perhaps, just recently, yet it's one of the biggest laggards just in the past week and a half, 2 weeks or so. Is there anything that we should read into that with regard to whether the consumer is still healthy or not?
I think that was a sell on the news situation. I think we should read two things into it. Number one, the restaurant space is poised to go higher. So the fact is we have fewer restaurant stocks creating scarcity value or a valuation floor in terms of premiums or multiples. And the second thing is we have balanced supply and demand. So sales performance has gone from negative to positive. Again, Darden's sell on the news, and a little bit because the other casual diners, they're also starting to do well. So sometimes when that gap closes between the outperformance, you'll have stocks react the way Darden did on its last print.
I love, but I'm slightly uncomfortable with the idea that all of your stocks are rated overweight in the restaurant category. But be that as it may, I'm going to ask you a sort of a similar question to one I asked Ron Christie a few moments ago. Is this as good as it gets? You seem to believe that these stocks can go higher, that the momentum can continue.
So in the last expansion cycle, restaurant stocks traded at a 500 basis point or 5 multiple PE turn to the market. Today, the index as we measure it is at parity. So we have no doubt that restaurant stocks are going higher. If you look back at our ratings 6, 12, 18 months ago, I would say we had many more underweight ratings. They've been consolidated. Private equity and strategic buyers came in and bought. We've lost 1/3 of our universe of coverage. And again, that puts a floor in the space, and that plays, it's a big factor to take into consideration.
It seems like every day I get a new flyer in the mail, Nicole, from a meal prep, a meal kit company that comes in and wants my dinner business. How much of a challenge do you assess for the Blue Aprons of the world or even Walmart getting into that meal kit business?
We call that shadow supply. So there's many, many places that you eat today that you didn't eat before. Before it was just a consideration set between full service, sitting down, or quick service, getting your meal and moving on. There are other places, whether that's a cinema, an adventure play, gaming, arcade, or meal kits prepared at home. They're all really small dollar amounts when you think about the $800 billion restaurant industry. So while they could grow rapidly, they're really so small in comparison. And combined shadow supply is something to think about, but meal kits in particular is not something that we're concerned about.